Hey folks, Dan Frio here, the rate update. Today we're going to talk about forbearance, and there's millions of people that went through the forbearance process, and the guidelines keep changing. So what we're going to talk about now is once the forbearance time lapses, what options do you have? And I watch a lot of videos on here, but it's the crazy thing is 99% of the people that are posting all these videos are not even in the mortgage business, and they get their information from like Google searches or wherever they get it from. We're a lender, and so I wanted to give you guys the true guidelines behind all your options that you have available to you once your forbearance time lapses. So that's what we're going to talk about next. Don't go away. My name is Dan Frio. I do the rate updates. I post every day on YouTube, giving you guys information on mortgage rates and what's going on that day, what I predict in economic news out that week. And then I try to forecast as far out as I can. But the tough thing is once you get out past a few days and weeks, it's a guess. And I'll be honest with you. The weathermen can't even tell you it's Monday today. They don't even know what it's going to do on Friday. So there's so much economic data that comes in on a daily basis that, anything can spur the market one way or another. So if somebody comes back and says that, the stock market's going to be up tomorrow for sure, they don't know. So that's why I try to post these videos to let you guys know what's going on in the mortgage business. I'm a mortgage lender, have been doing this for 32 years. I'm providing all this information to you guys, and I created my channel basically to debunk all the nonsense out there, because a lot of people try to get, when I'm watching these YouTube videos, a lot of them are trying to get clickbait and try to make money on YouTube, but are they really giving you the accurate information? So I want to go over today how forbearances or a forbearance affects you and your options once the forbearance time has elapsed. So this is hot off the press. I just got it from my head underwriters today. Again, we're a lender. These are facts. These are what we can or cannot do. So I'm going to go over conventional financing, FHA, VA, and USDA. So if you have one of those, pay attention, because this might give you great options on how to refinance once your forbearance is up. Here's what I'm foreseeing is the government came out, and Fannie Mae and Freddie Mac came out and said, we're going to allow forbearances to go another, they extended it one more time. Well, they're pushing it all the way now to a year. Most of these cases started in March and April of last year. So my prediction is in March and April of this year, a lot of people are going to get blindsided. They're going to get this bill to say, you can bring your account current and you need to send in $20,000. Or, your payment's going to go up $200 or $300. Or we're going to add this big chunk at the end of the term. Now, I might be able to kill a few birds with one stone for you in this process. One, most likely, if you took out a rate over your loan over a year ago, which you did because you've been in forbearance for coming on a year in most cases, over the past year, rates have dropped almost on average 1 full percent. Doesn't matter which program you have, FHA, VA, USDA, conventional, jumbos. Almost every criteria or every program, the rate's down about 1 full percent of where we were a year ago, even 2 years ago. So the first bird we're going to kill in this situation, sorry to analyze it that way, is dropping your rate. Okay, so that should save you some money right there. The second thing is you've probably had your loan 2 or 3, 4 years. So possibly to get you out of the hole again is we can go back to a 30-year term, thus even reducing your payment even more. Okay, so because of those two scenarios, we should be able to put you in a much better position. The next thing you got to realize is what we can do is factor and do the math behind all of this is here's your mortgage now. And again, you're going to have one of three scenarios. One, you have to bring a chunk of money now to bring that account current. Okay. Option two is they will, or the lender could amortize your deficiency over maybe a 12-month time frame or a 2-year time frame. These are all ifs because we don't really know what's going to happen. So let's say, for example, you owe $20,000 and they say, okay, we're going to divide that over the next 2 years. It's going to add another, say, $1,000 to your current mortgage payment. Can you afford it? Maybe not. The next thing is you might say, well, they're just going to throw it on the back end. But all this time you have interest accruing on that. Plus now you have a deficiency balance where there's interest accruing on top of that as well. So all those are a bad scenario. So here's my idea for you. Look into refinancing. Okay? So here's the information that's hot off the presses. You hear a lot of information saying, Fannie Mae and HUD and FHA and VA, they've extended the forbearance time for another 3 or 6 months or so. But what a lot of people aren't discussing with you is once it's over, now what? So I want to give you information just to arm you on here's what I can do so you don't freak out and say, oh man, now my payments are starting to come due. I can afford what I was paying. I can't afford $1,000 more. I can't afford to bring $20,000 right now to bring my account current. Am I going to lose my house? Well, don't worry. Be proactive instead of reactive. So let's go over the guideline changes that just took effect and how we are underwriting for the forbearance process. Let's start first with conventional financing. So conventional financing reads this. If paid mortgage current at end of forbearance, can refinance with no wait time. So meaning if you paid your forbearance current, obviously I don't have to read this again to you, if you paid it current, you can refinance with no wait time. However, if we have any of those other scenarios where you didn't pay it forward or pay it current, you amortized over the next 12 or 24 months to increase your payment, or they threw the balance on the back end, you have to make 3 payments on time. Once the forbearance is over, you have to make 3 payments, then we can refinance you, okay? However, government-backed loans, which is FHA, VA, and USDA, here's a great opportunity for you to refinance and not have to bring the account current. Here's how it reads. FHA doesn't require payments to be made up. They don't review them as late. But if the mortgage was modified, 3 payments based on the modification has to be made. So basically what they're saying is your forbearance comes due on an FHA, VA, and USDA loan. If you didn't modify your loan during the forbearance time, we can refinance you. Because those late pays that you made aren't truly showing as late payments. Okay, so let me make it simple. You have an FHA, VA, or USDA loan. You went in forbearance last June. January this year, the bank's finally saying, forbearance is over. You have to start making payments. Call me. Why? Because your lender might require that you bring one big payment to bring it current. They might adjust your payment up to $300, $400, up to $1,000 a month, increase your payment to bring it current or recoup those missed payments that you made, or they add it on the back end and you're going to have interest accumulating on interest. So I highly suggest call. Let's refinance. Again, let's recap the refinance process. You don't have to bring those payments current. We will have to add that any deficiency balance into your loan amount, but let's look at extending your term back to a 30-year term, and I'll get to that in a second because I don't want you to pay any more on this than you have to. What I'm trying to do is get you out of a hole, okay? So we'll pay the account current, you're going to get a lower interest rate, and we're going to extend that loan back to a 30-year term. Let's say, for example, in a great world, let's say your payment just remains the same. Well, you missed 6, 8, 12 months mortgage payments. So let's say, okay, now we can keep the payment the same. It's a win-win for you. Versus, what's the alternative? You bring in 6, 8, 12 payments. You send that to your mortgage company. Do you have it? Maybe not. If they wanted to recast your loan payments for the next year, your payments go up $400, $500, $600 a month. Can you do that? Maybe not. And you sure as heck don't want to have to pay on a 30-year mortgage and then owe another $20,000 or $30,000. So what we can look at is, again, refinance your current balance plus the deficiency balance, putting it on a 30-year term at the lower rates. Because again, if you closed your loan a year, 2, 3 years ago, rates just are at historic lows. Your rates almost by all means going to be lower than you're paying now. Okay, so now what happens is we get you back on track. Okay, so 3, 4, 6 months, 12 months down the road, everything is kind of settling out. We've established some money in the bank for a savings account. So if this happens again, you're not at the bank's mercy again, and you start fresh. So that gets you out of that hole. Every other scenario puts you into a deep, deep hole, where this scenario actually is a win-win for you. So please leave some comments down below. We're going to start videos this week going over asset management, how you can maybe retire on time. We're going to go over stocks, bonds, Roth IRAs, retirement accounts, cryptocurrency, which is a hot word right now, and so much more. But this video is based on forbearance and how to get you out of the forbearance with the best scenario possible. So if you would like to reach out to me or my team, I'd love for you to be able to do that. And here's the best way to reach us. The best way to find out more is go to our website, therateupdate.com. You can scroll down. Right here is our 800 phone number. It's 844-775-LOAN. That's 844-775-5626. Or just click up here, apply now. It's a 100% secure system. And once you're done through that process, it'll take you about 5 or 6 minutes to complete. But based on the answers that you give it or the inputted data that you put in, it'll ask you for some certain documentation, such as if you're a W-2 employee, it's going to ask you for a pay stub and a W-2. It's going to ask you for a mortgage statement. It's going to ask you for some other things. It is 100% secure, and by doing that, it gives me all the tools that I need to figure out the best scenario for you, and then I'll get back with you probably within the hour and with a game plan. So that's all I've asked you to do. If you like the video, please don't forget to give me a thumbs up, subscribe down below, smash the bell down there so every time I do post a video, you get an alert. But the main gist of my channel is to advise those on the mortgage business, what's happening with mortgage rates, the mortgage industry, housing, and so forth. We are putting together a whole new tutorial program on wealth management, so stay tuned. That'll be coming out in about a week. God bless. Take care. Have a great day. Hope to hear from you. Bye-bye.